Hello, everyone, and a warm welcome to all you aspiring chartered accountants. We're kicking things off with a foundational explainer on the meaning and scope of accounting. Our goal here is to build a really solid base for your studies, starting right from the absolute core principles.
You know, if you stop and think about it, economic activity is all around us. Whether it's a salary person just trying to manage their monthly budget, or a huge telecom company tracking millions of phone calls, we're all engaged in it. And these activities, they're all carried out through transactions and events.
And that's really the big question, isn't it? Let's say you invest in a business, you pay your rent, you sell some goods. How do you actually know if you've made a profit or a loss? Well, this is precisely the problem that accounting was designed to solve, to give us a systematic way to make sense of all this financial activity.
So, to get the full picture, we're going to break this down into 6 key areas. First, we'll cover the what accounting actually is. Then, the how, the process behind it. We'll clear up that classic point of confusion between bookkeeping and accounting, look at who uses this info, and we'll be real about its limitations. And finally, we'll get to what's probably the most important part for you, the role of the accountant.
Okay, let's dive right in. Before we can do anything else, we need a really solid definition. So, what exactly is accounting, and why on earth do people call it the language of business?
This classic definition is a great starting point. It breaks accounting down into 4 key actions. First, you record all the transactions. Then, you classify them into logical groups. Next, you summarize everything into reports. And finally, and this is key, you interpret what it all means. The most important thing to remember here is that we're only dealing with things that have a financial character, things that can be measured in money.
Now this brings us to a subtle but really important distinction, the difference between a transaction and an event. A transaction is something you do. It's an action, like buying goods or paying rent. An event, on the other hand, is the result or consequence of those actions. So, for example, earning a profit of 42,000 rupees, that's an event. It's the end result of many transactions, like buying, selling, and paying your expenses.
A few years later, a more modern definition popped up, and I want you to notice the shift in focus here. It's not just about interpreting the results for ourselves anymore. It's about communicating that information so that other people, the users, can make informed decisions. This really highlights accounting's role as a service function. We provide valuable data to stakeholders.
So, we've got these key actions: recording, classifying, summarizing, and communicating. But how do they all fit together? Well, they form a very clear logical process.
The accounting process has a really nice flow to it. First, we start by recording every single transaction in what's basically a financial diary, called a journal. Next, we classify these entries, sorting them into specific buckets, like cash, sales, or rent, in a book called the ledger. Step 3 is where we summarize all this data into the financial statements. And from there, we get into the higher level stuff, analyzing the data, interpreting what it all means for the business, and finally communicating those insights to the people who need them.
Okay, this brings us to a really common point of confusion when we need to get straight for your foundation exams. What's the real difference between bookkeeping and accounting? Are they the same thing?
Here's the most important thing to remember. Accounting starts where bookkeeping ends. That's it. Think of bookkeeping as the meticulous day-to-day process of just recording every transaction. It's the foundation. Accounting then takes all that raw data and transforms it, moving into the summarizing, analyzing, and interpreting stages. So, bookkeeping gives you raw data, accounting turns that data into powerful reports that people actually use to make big decisions.
All right, so now we get the process. Let's dig a little deeper and explore the different specializations within accounting, and, just as important, who's actually using all this information we're putting together.
See, accounting isn't just one single thing. Financial accounting is what most people think of, preparing statements for folks outside the company. Management accounting is all about internal reports that help managers make decisions. Cost accounting dives deep into figuring out the cost of products or services. And then you have these newer fields, like social responsibility and human resource accounting, which try to measure a company's impact on society or the value of its employees.
So, who are we preparing all these reports for? Well, you can think of them in 2 main groups. First, you've got your internal users, the management. They need the nitty-gritty details to answer questions like, can we afford to hire more people this quarter? Then, you have your external users, people like investors and banks. They don't need to see every single transaction. They just need the big picture to answer questions like, is this a safe company to put my money in, or should we give them that loan?
It's also super important to be realistic. Accounting is an incredibly powerful tool, for sure, but it does have its limitations. And it doesn't exist in a bubble. It's deeply connected to a bunch of other professional fields.
Look, we have to be honest here. Accounting has some blind spots. For instance, it's fantastic at telling you the value of your computers, but it has no way to put a number on the value of the brilliant programmer who's using that computer. It gives you a perfect snapshot of what happened last year, but it can't predict the future. And it's not pure science. It relies on professional judgment, like estimating how long a machine will last. These aren't failures, but they are important limitations you have to keep in mind.
A truly great accountant needs to know more than just accounting. This field draws heavily from economics for ideas about value, from statistics for data analysis, from mathematics for all the complex calculations, and from law, which sets the rules for how companies have to report their finances. And of course, it provides the main source of information for the entire field of management. You're not just a numbers person, you're standing right at the intersection of all these critical disciplines.
And finally, let's bring it all home and look at what a qualified accountant actually does, the services they provide to businesses and to society as a whole.
The role of an accountant is just so incredibly diverse. I mean, yeah, it starts with the core function of maintaining accurate books, but from there, it just branches out everywhere. You could become an auditor, acting like a financial detective. You could be a tax expert, helping a business navigate really complex laws. You could be a consultant, advising on huge strategic decisions, or a financial advisor, guiding investments. The point is, it's a dynamic, essential profession with so many different paths you can take.
So, let's do a quick recap of the key takeaways. Accounting is a whole process that turns raw financial data into useful information for decision-making. It builds on the foundational work of bookkeeping, it serves a whole range of different users, both inside and outside the company, and it opens the door to a ton of different professional roles, from auditing to financial advisory. As you start on this journey, just remember this. Accounting isn't just about numbers and rules, it's about communication. It's the language businesses use to tell their story of success, of struggle, of strategy. So the real question for you is, what kind of story will you help tell?